Hey there, it's the Asset Protector here, and today I'm exposing one of the most misunderstood tools in retirement planning, life insurance. You heard it right, life insurance. But not just any life insurance. I'm talking about how permanent life insurance can provide powerful living benefits that go way beyond the death benefit. Let's get into it, shall we? Number one, life insurance as a tax-free retirement supplement. Supplement. It shouldn't be all into and end all, but a supplement like Social Security, meaning that you have more than one basket of eggs, right? And you can tap into your life insurance policy also to help you during life. So permanent life insurance policies like the IUL, or we call it Index Universal Life Insurance, it builds tax-deferred cash value. You can access that cash from your policy through policy loans and you can get it tax-free. Now, this is how it becomes a supplemental stream of income during your retirement, especially if you've maxed out your 401k or your IRA. Kind of think of it like a Roth IRA on steroids with no income limits or required minimum distribution or RMDs. It creates liquidity during market volatility. Cash value like life insurance isn't tied to the stock market. It's operating in the stock market, only on the upside of the stock market, but it's not tied directly to the stock market, which means that you can pull money from it during the time that the market has downtimes and volatility without getting hit with that volatility. So in a nutshell, imagine you're in a one-way relationship. Have you ever been in a one-sided relationship? Meaning that you had a friend and they were only with you for what they can get? Well, how did that make you feel? If it's anything like the friends have done me, so-called friends, I didn't like it too much. Well, here's an opportunity for you to do that, and everybody is happy. You're happy because you have access to your cash. You are happy because when the market is volatile, guess what? You don't get hit. You're not making any money, but guess what? You're not losing anything either. So basically this protects your portfolio and keeps your retirement plan stable. When the market takes a hit, your retirement shouldn't have to, and it won't. Living benefits for chronic or critical illnesses. Many modern policies today, these permanent policies, and a lot of the term policies too, they include what's called riders. Imagine a motorcycle, like one of those German motorcycles that have that little bucket on the side that someone can sit in and they can ride in that. You're guiding, but they're riding. So basically, in this case, these critical, terminal, and chronic illnesses are riders, meaning you can access a portion of your face value or your death benefit from that life insurance policy so that you can use that in the event you get one of those, you get chronically ill or terminally ill or critically ill, you can't work in so many words. Now you have a pool of money, cash, that you can pull from that keeps you afloat until you regain your health again. So, like I said, these they allow you to access the benefit, but only up to about 75%. And I said only, meaning you can't take the whole 100%, because if you do, then it will cancel the policy. It will surrender the policy. So keep that in mind. So basically, in a nutshell, this provides peace of mind when you need it the most. It's like a long-term care insurance or income replacement and legacy planning bundled all into one. It acts as a personal bank. Remember I told you about infinite banking? The infinite banking concept is basically when you save up your money and when you need it, you can borrow money from yourself, pay it back just like you would the bank at a lower interest rate. But guess who get paid the interest? You. So you're paying yourself to use your own money as opposed to going to the bank, borrowing money, and then paying them. If you have great credit, excellent credit, upwards of 8 to 13%. So just think about that. The policy keeps growing even when you're not using it, if it is structured properly. So you want to make sure you get with someone that knows what they are doing. I know you can buy policies. You see them all the time on social media, on television ads, and you're going on buying that stuff, but you're not reading the fine print. You're not reading in between the line. And because you bought it from a computer-generated application, there's no one to blame but yourself. So if you're dealing with your money, you're looking at your long term, don't be just jumping into stuff. They put these commercials and infomercials out here in ads because they know people are up 3 o'clock in the morning, in the wee hours of the morning. Boredom has set in, and guess what? They start making irrational purchases. It's best to get with someone that's a real human being that you can talk to and talk these things through and talk about various scenarios. And some of these scenarios you haven't even thought about, and you probably won't until calamity hits and you need to use it, and then you find yourself in a pickle. So again, you can use this to fund opportunities like real estate. You want to go into, maybe you want to start buying homes and renting them out, or you want it to open up some other business, or you need it for an emergency. You know, you have access to your money without touching or selling your assets, and your other assets can continue to grow, like stocks and things of that nature. Or if you have a 401k at your work, you can continue to let that build, and you can borrow money from yourself without having to get stricken with all of these fees and penalties, especially if you're someone that's under 59 and a half years old. So the wealthy has used this strategy for decades, and now is your turn. Legacy and retirement, it does both. Permanent life insurance guarantees a tax-free death benefit to your heirs. And also, while you're alive, it provides liquidity, income, and protection. It bridges the gap between living a full retirement and leaving something behind. So you want to make sure that you're okay in retirement, but you also want to be a blessing to your heirs, whether it's your children, your grandchildren, or maybe even your parents, especially those of you who have younger parents. And it's not always the oldest person to pass away first, sometimes the youngest. And it's not always the sickest. Sometimes people are in good health, get into an accident, or what have you, and you end up unalive, and then what do you have a plan? So this is why I say life insurance isn't about just dying. It's about living well and leaving well. What are you leaving behind? Are you better off after you pass away, and have you lived that quality of life? And when I say better off, I'm not being sarcastic. I mean, are you doing something for the next generation in your family to provide some welfare, to ensure that your family are not stressing, straining, and struggling financially? So if you thought life insurance was just for when you die, think again. It's a retirement tool. It's tax-free income. It's a stream of income that you have available with living benefits, as well as leaving a wealthy legacy system in place. So I'm the asset protector here, and I hope this video has added some value to you. And if you are ready to put your retirement on offense and stop just living on defense, then visit me today at www.unitedprospero.com and schedule your free session today. Let's build prosperity on purpose. Bye for now.